So welcome everybody. Thanks for joining us here at FX Streets. I am coming to you from pretty cold Chicago. All right. So my name is Sam Seiden from Online Trading Academy, and want to pick up where we left off last session. So we were together, I believe, a couple weeks ago. I think it was about 2 weeks ago or so, and during that session. That was really a lesson-based session where we laid out the strategy, the whole supply-demand concept, from kind of from the bottom up. And then, okay. Yeah, let me capture the chart again for you, Boyke. There you go. All right. And then I promised you today we would go spend most of our time in the live market starting to apply what we've learned. Okay. Now, we also started to do that last session. We found a bunch of levels in the bigger time frames, and so we're going to go review some of those. A number of those have met entry. The euro here is one of them that hit one of our levels yesterday. I don't know if anybody took that trade, but we'll get into it. And I wanted to show you here, too, on the screen, before we get into the live market, just a couple slides. I just have two for you. I just want to go over yesterday's trading and today's trading so far. Now, anytime I show you statements, just so you know, make sure you understand, full disclosure, that those are real trades. Those aren't demo accounts or hypothetical returns. I'm in the trading world to not just help with the education, but also trade. I mean, that's what this is all about, right? So if I can do that and help you succeed at this as well, then I'm happy. All right, so let's take a look. So last time we were together, one of the charts we focused on was this euro. Okay. Now we're going to dive into the live market shortly, but I took the picture. I captured this chart just about an hour ago, and yesterday and today, price finally dipped down into the demand level that we found in the euro. Okay. All right. Remember, what is a demand level? When you see the word demand here, don't just think of the conventional word support. Okay? Remember, everybody has a different definition of support. If you really want to, have the edge when it comes to trading, you have to take it beyond that. You have to think, okay, how do you make money? Well, you have to buy low, sell high, or sell high and buy low. Okay. The next question is, where do you buy low and sell high? How do you identify price levels that where the market's too cheap and identify price levels where the market's too expensive? Okay. All right. Nice job, Carol. Good job. So, how do you identify those levels? Well, think about the only picture that represents that. The picture is this: a price level where the market is too cheap and is always going to turn higher is a price level where willing demand exceeds willing supply. Okay. So what does that picture look like on a price chart? Well, it's this. Okay. Drop, base, strong rally out of this area. Right? Okay. Remember, why couldn't prices stay in this level? Why did they have to rally away in such strong fashion? Because there's way too much willing demand here and you run out of sellers. Therefore, if and when prices come back to this level, okay, all right. No, not counter trend, Boyke. We don't want to be trading counter trend. We never want to be trading counter trend. Okay? So what we're doing is we want to make sure that we're in the trend when it begins. Okay? And then once the trend is underway, we want to trade with that trend, but we never want to trade counter trend. Okay? This only looks like, buying here, like, right? Gotcha. So buying here may look counter trend, but it's only counter trend because I think the industry, the industry language is completely wrong. You know what I'm saying? It looks like we're buying in a downtrend. Well, you always want to buy when something's on sale and there's only a few of those items left, right? Okay, that's when prices are about to go higher. All right? Okay. It depends, Paulo, what your definition of a downtrend is. If in an uptrend is, remember, we don't want to deal in the world of conventional technical analysis. In fact, we don't want any of our vocabulary to be in that conventional world, right? Okay? Think about it, and I don't want to spend too much time on this part, but you've had, all the conventional technical analysis books have the same information, same strategies, same everything, okay? But why is it then that everybody reads that stuff, follows those rules, but everybody loses money? How come nobody makes money with that stuff? It's because most people fail to question it and say, wait a second, okay, I know this information's been out here for 100 years, but does it make any sense? Okay? So just be careful with that. All right, so take a look. Forex spec, should I go long U.S. dollar now? I would say absolutely not. But we'll take a look at the chart in a minute. So, last part, when prices were down here yesterday, today, think about the buyers and sellers here. Who was selling? The people that were selling here are the people that read the books, the people that are just selling because this thing's in a downtrend, selling because of all the bad news, okay? However, the problem is they're selling after a drop in price and into a price level where demand exceeds supply. The laws of supply and demand guarantee that you're going to lose consistently if you do that, okay? Therefore, we want to be the buyer to that novice seller, okay? That's what I did in 2 different accounts, and actually just closed out more of the positions. So this gain is much bigger. I just, I'll have to wait for tonight's statement to show that. But, so not a big gain, on this, and the trade's, just getting started. But, just wanted to show you that, for 2 reasons. Number 1, to educate you. Number 2, I don't want you to think I just come here and talk to you. I want to make sure you know that I would never suggest that you do anything that I'm not willing to do. All right? So again, the word supply, another word for that is retail prices. The word demand, another word for that is wholesale prices. That's what they really are, okay? Sell at retail prices to someone who's trained to buy at retail prices. Yesterday and today, for those of us that bought the euro, we're buying at wholesale prices from people who are trained to sell at wholesale prices, okay? Yeah, so Paulo, in a minute I'm going to jump into the live market. Actually, let me show you this, Paulo. Good point. No, I didn't take those trades took those trades because of where we're at in the big time frame. But about an hour before the session just started, I just grabbed this chart real quick, so I apologize. It looks a little sloppy. But this is a trade I just took. I don't have the statement yet, so I'm just showing you the trade blotter. This is all in the last hour. Little 1-minute chart of the euro. Now, I took this trade in the euro futures. But to your point, Paulo, take a look, okay? This is just a 1-minute chart. Now, you can do this in the euro futures, but I wouldn't try this in the spot forex, okay? What I mean is going down to such a small time frame. All right, but there are plenty of opportunities to do what I'm going to show you here. This is what I just did in the last hour here. So a little demand level forms on a tiny time frame in the euro. Now, why was I interested in demand levels and not supply levels on such a small time frame this morning? Because of where we're at in the larger time frame, okay? So as soon as price popped up with this green candle here, that told me that there's more willing demand here. That's the only reason why prices popped up, okay? When prices came back down to this level, I had a very low risk, okay, higher reward buying opportunity, okay? So just a very quick little trade, but again, just full disclosure, took this trade in the euro futures because it's such a small time frame, not the spot market. You could probably do the same thing in the spot market. The odds are going to be more stacked in your favor if you do it in the futures on such a small time frame. Make sense? Okay. All right. So I wanted to share those trades with you, and in the euro again, you could be playing the euro for the much bigger time frame, bigger picture, and that's fine too. But once you know here's the point though, once you know that you're in that big picture sweet spot, okay, you could trade it for the bigger, swing trade that it could possibly be, or you can find tiny little demand levels and most of them are going to be golden, right? Okay, let me just make sure, I read back here and let's see. Able, yeah. So everything we do at Online Trade Academy is very rule-based, and I'm assuming that most people in here were in our last session where we went over this in detail, the lesson, okay? But yeah, when I bought here, I bought right here at this top black line with a protective sell stop just about a tick below the area, just about a pip or tick below the area, okay? All right? Now again, did I know for sure that this rally was going to happen? No. Okay, believe me, I don't have a crystal ball, but I do follow the strategy a very simple rule-based strategy that is based on the irrefutable laws of supply and demand, right? I'm not trying to reinvent the wheel. All I'm saying is, look, how you make money buying and selling anything out there is exactly what you want to be doing here. And when prices, another word for demand is what? What else do we call this? What do we call this? We just went over it. Profit margin, first time trader, there would be the distance to your nearest opposing supply level. So what's another word for this demand level? Retail, exactly. And when prices are at, I'm sorry, I messed that up. Paulo, you got it wrong, and I just read what you wrote and said it. All right, exactly, wholesale, right? These are wholesale prices. No problem. We both got it wrong. These are wholesale prices, and let me ask you, no matter where you live in the world, no matter what business you're in, when prices are at wholesale levels, do you want to be the buyer or the seller? What do you want to do? Yeah, you want to be the buyer, okay? Okay? But if you follow the world of conventional technical analysis, when prices are at wholesale levels, you're always going to be in a time frame in a downtrend in one time frame or another. Okay? When prices are at wholesale levels, the news is never going to be good. It's always going to be bad. Okay? That's why most people are trained and conditioned to do the opposite of what you should do. So keep it simple. When prices are at wholesale levels and retail levels are far away, you're better off being the buyer. Okay? Yes, Boyke, absolutely. Absolutely. The only thing we would add to it, Boyke, is we want to be a buyer at demand levels in an uptrend. We want to be a seller at supply levels in a downtrend. Okay? The only thing I'm going to add to that is, in the larger time frame, we want to make sure that we're in the market when the trend begins. And that's what conventional technical analysis always keeps you out of. That's the difference. Okay? All right. Let's see. Trying trader. Are you talking about this supply level here? Or are you talking about this one down here? The supply or the demand level? And then we'll move on to the live market. The demand level. Yeah, I would have taken this. I just wasn't looking. I was preparing for the session and, had emails coming in and I had instant messenger up, which is never a good idea. But yeah, there's nothing better about this one than this one. I just didn't see it and didn't take it. Okay, that's all. All right. Okay. Let's move on. Any questions on that? We can always, again, it's just the same picture that we worked on last week. So let's go into the live market here. Okay, and hopefully this is helpful. Again, I want to show you a real application of what we're doing here. All right, let's take a look. So everybody should be able to see the live chart of the euro. Okay. Paulo, yeah, I spend very little time watching the markets. And I can tell you, after our session's over here, I don't have any more trading to do today. I mean, I've got longer, I've got swing trades and stuff, but when it comes to short-term trading, you're talking maybe a couple hours in the morning. Okay. All right. Yeah. Okay. All right. Let's move on. So here is the euro. Let's revisit this little 1-minute chart for a minute. Okay. Because there's lots of stuff going on. Well, first of all, before we do that, take a look at, so everybody can see the euro chart here. Take a look at, again, on the weekly, we're down into our level. And our last session that we had here, we looked at this euro demand levels. Everybody remember this one? We finally hit it yesterday and today. We went pretty deep into it also. And remember, we also pointed out this US dollar supply level. Somebody asked a little while ago, should we be, buying the dollar here? That's, I think, the last thing you want to be doing here. If anything, you want to be selling it, right? Take a look. You're right into that level with another level sitting just above. Okay? Paulo, yeah. So Paulo's pointing out something I was going to talk about in a minute, but we can point it out now. He's saying, what about the level above? That looks better. I would agree with you. It's more of the rally-based drop that we're looking for. Okay, remember, our best levels are rally-based drop for supply, drop-based rally for demand, not rally-based rally and drop-based drop. Okay, so there's that. Let me grab this chart for you here. Okay. Now also too, these short time frame levels that I showed you, one of them today. Okay, remember, you don't need, you're in and out of those very quickly. Okay, and don't expect prices to shoot up like they did when I was in there. There's a number of things. Remember, we're together for an hour here, but I spend most of my time in the extended learning track, the graduate online trading program and online trading academy. So there's a lot and this isn't kind of a pitch for the program. I just want you to know there's more to this than just there's all these little odds enhancers that we talk about. You've probably seen them in some of the recordings I've done. One of the things I want to point out is making sure that it's a fresh level. Okay, that's something we focus on a lot in the trading room at Online Trading Academy, right? We don't want to take the second, third, fourth pullback into a level. We want to make sure it's fresh. That's when you're going to get your biggest pop out of the level, okay? Harley, good question. How many ticks do you go for? Usually try for at least 2 to 1. So if you're risking, 5 ticks, go for like 10 or so. All right. Okay. All right, so dollar into supply here with an even better looking supply level above, euro into demand. That means in the smaller time frames, we probably want to be leaning on demand levels. Take a look at this area right here on the 1 minute. I was going to point this out to you too. This is very important. So here's where that entry was taken, right here that I showed you. But look at this level, right? Doesn't this look like the exact same level? Just the opposite of what I took today. Doesn't that look just like it? Okay, here's another very important point for you. There you go. All right, so see the supply level I just drew in? Remember, here's the demand level. Here's where I bought to make that $1,800 off this level right here. This is the entry. But look at this supply level here. How come when price came back to it, it bounced a little bit, but then went right through it? Why is that? What's the answer? It's very important that you understand this concept right here. Why did this demand level work so well? Why is this supply level, which actually looks better, how come this one failed miserably? Why is that? Okay? Why would I never take this supply level as an entry, but why would I always take this demand level as an entry? Exactly. The larger time frame, look at the daily chart, okay? Your short-term supply levels should fail. They should all fail really well. Your short time frame demand levels should work out pretty well. Okay? That's the key. So the larger time frame is telling us which whether to be a buyer or a seller. So even though the picture of the setup is going to look identical, okay, I'm going to ignore every supply level that shows up and focus on taking the demand levels. Does that make sense? The odds are stacked in the favor of the buyer here, not the seller. All right. Okay. Let's move on. Okay. Rafa, yeah, so again, on the daily chart, we're into larger time frame demand, which means on the smaller time frame, okay, the larger time frame is down, but it's likely to turn here, okay? All right. Yeah, so Rafa, I don't know if you were in our last session, but again, we want to be, everything we're talking about here has to do with market timing, okay? We are definitely, our strategy is definitely attempting to time the market's turning points in advance with a very high degree of accuracy, all right? And then you'll get it. All right, yeah, thanks, Paulo. All right, so let's move on. Let's go to a little bit bigger time frame. We don't need to watch a 1 minute chart anymore. Let me clean this chart up for you, and then we'll move on. Okay. Trying trader, excellent question. Very good question there. Let's answer that. Okay. So trying trader is asking how long does it take to become trying trader. I trade the S&P more than anything else. Definitely. The S&P is probably the number one market definitely the number one market I trade, and then the currencies are after that. Okay? But yeah, great question. How long does it take for someone to get good at this? The answer is, I would say, it's really this. It depends on, a lot of people think education is the most important thing. I kind of agree with that, but in the trading industry, I'd say the biggest problem is the education, right? Because so what I'm getting at is it depends on your education. If you have proper education and you learn the right way from the beginning, I see those people. It's not that difficult for them. But if you learn this stuff the wrong way from the beginning, it could take forever. Those people, the majority of those people, as you see with the numbers, don't make it. They end up losing their money, right? So it all depends on, if you're learning the right way, it's not that big a deal. Okay? Now again, I'm not trying to say that I'm like trying to, that I've got some golden strategy here. Okay? I'm not reinventing the wheel. I'm not looking to, create the next, cool strategy. All I'm saying is that how you make money buying and selling anything in your life is exactly what you need to be doing here. The problem is everybody learns to do this the opposite of that. Okay? People read the trading books, and that's poison, right? You're going to learn to buy, you're going to learn uptrends. You're going to learn to buy after a big rally in price, right? You're going to learn, the indicators. You're going to, all the ways that you learn to buy into a market are always late after prices have already rallied a ton. Okay? You would never do that in any other part of your life. That's my, right? So just, save your money on courses, save your money on books. Okay? Think about how you buy things when you go to the grocery store and buy food. You ever offer to pay more for the food than they're asking for it? I mean, think of your favorite restaurant and your favorite meal at that restaurant. When the server brings the check, do you ever offer to pay double or more because you like the food so much? Of course not. Okay? So just, do the same thing here. All right. Let's take a look. Yeah, so the left chart up here is the U.S. dollar. Again, into supply, euro into demand. That's what I would be playing off of, this week. Okay? And let's move on to another market. All right? Why don't we jump down to, let's take a look. Rafa, right after the session today is a great time to write that email, because I'll be on email working on a big project for the rest of the day today. Okay. All right, so let's take a look at the pound. Everybody should see the pound here. Let me just recapture the picture for you. Okay. And let's see, I don't know why all these lines are in here. Way too many lines in this chart. Okay. So it looks like we drew these lines in last time, but the pound has not reached any of these levels. Okay, pound's getting a little bump here. We kind of ignored this big area here, which, prices would probably turn. I guess they're hitting this level and turning already. The issue with the pound here on the daily chart is you're hitting this level and prices look like they're turning, because the dollar's also hitting supply. So we may have went a little low there for an entry. Okay. Abel, I could tell you, I can answer that question real easily. Most of the time, we're doing the exact opposite of that strategy. Okay? All right. So let me go to a different market. Now, and I can go to any market you want to go to, so let's just find somewhere we may have an entry fairly close. Or, let's see, just a sec. Euro-yen, we can look at Euro-yen. Let's take a look at Euro-yen. Yeah, I don't really care which. I just bounce around to like 2 or 3 markets just to see if anything's close. Trying trader. Do you always have pending orders? I have 2 ways that I do this for my personal accounts. One is I've automated a strategy that does this. So those are always pending orders once the trade is out there. And on the other one, for the other account, half the time they're pending orders. The other half are very short-term trades, so I'm just kind of pushing the buttons on those. But I strongly recommend pending orders. Okay? Sure, Abel, we can look at dollar-yen. Absolutely. Someone wanted to look at euro-yen first, so let's take a look at that. Okay? So, here we go. So you should be able to see the euro-yen on your chart. If we look at the larger time frame, we see prices down, quite a bit. So we want to probably find a demand level below current price. But when you look at the daily chart, there's still a little ways to go before we get down to this, 106 and change area down here. Okay? So I think the daily chart really says it best here. Let's map this out on the daily chart, and then we can refine this on the smaller time frames. Okay? So I'm gonna expand this chart a little bit, and let's start to do what we worked on last time. All right. Sure, I can refresh this, no problem. Okay, so we want to start with current price, okay, and then we want to figure out where the the origin of the last strong rally and decline in price happened from, right? So on this chart, it's going to be fairly easy. We've got this level up here, and again, everything we do is very rule-based. So if I'm doing something that doesn't make a ton of sense to you, you probably just don't know the rule, and we can get there, okay? So let me put some lines in this chart. And let me bring this chart over a little bit. There's one. And the demand level, we actually have a gap down here, which is really nice, right? A gap represents really the strongest supply and demand imbalance, okay? All right. So these are both, I would say these are both fresh levels. Yeah, this bottom level, I guess price did rally away and 2 candles later came back and touched it. All right, but because price just touched that level and then turned higher, that's actually a clue. There's probably a ton of demand down there. You see how that little wick comes down there and just touches that? So these would be the next, 2 likely strong turning points in this market if you're looking to catch, a bigger move on the daily. But if you're not looking to swing trade or position trade, that's fine as well. But when prices come into either of these levels, you also know what you want to be doing on the smaller time frames. Okay, so given that we've mapped out where our larger time frame areas are in the chart, where supply exceeds demand up here, and where demand exceeds supply down here, now we can go to smaller time frames and look for levels. For example, take a look at this 240-minute chart just to the left of the euro yen. Take a look at this, the origin of this strong drop in price at 110.50. Okay? See this area here? Let me draw this in and then I'll explain something to you. All right, let me just, this is a little level right here. Again, not our ideal level, but it is the origin of a pretty strong drop in price. So let's take a look at that. Okay? So let me recapture the chart for you. Correct, Paulo, correct. Okay, and don't worry about prices. You might look at this and say, well, what if prices don't make it back to the level? I would tell you, and the veterans in here will probably tell you too, I'd say prices always come back to the level. Occasionally is there a level prices don't come back to? Maybe, but I don't ever remember seeing a level where prices didn't come back to eventually. Think about, and they really have to. And if you think about what these levels represent, you'll understand why they have to. Remember, these levels represent real willing buyers and real willing sellers. This is not, again, just conventional technical analysis, right? So prices are always going to go to where the orders are. Otherwise, the big banks and institutions wouldn't be in business, okay? But let me get back to my point here so you understand how to map this stuff out. So this level is right around 110.50. So let's take a look at this daily chart. We see here's 110.50 right up in here, right? Okay? So let's see. Let's see exactly where it's at. Hang on. Okay, so I'm just going to draw a kind of a red line right at 110.50, and I'm going to ask you a question because you need to focus on this question here. All right, that red line on the daily chart is right where that smaller time frame supply level comes in on the daily. So let me ask you, is that smaller time frame intraday supply level, is that well-placed or not well-placed on the larger time frame supply-demand curve that we've mapped out here? In other words, based on the larger time frame, okay, based on the larger time frame, is that in a good area to short or a bad area to short? Another way to say it, yeah, I would agree with you. It's well-placed, right? Again, is it near larger time frame supply or is it near larger time frame demand? It doesn't have to be near larger time frame supply, but it cannot be near larger time frame demand. That's the big thing, okay? All right? So yeah, we need a little rally in price, but again, if and when prices get to this level, what's another word for supply? What do we call that? What's another word for it? right? What would a bank call it? What would an institution call it? If you worked at a bank, yeah, they call it retail. They would never call it resistance. They would call it retail, right? Okay. Right. And when prices are at retail levels in any business, anywhere in the world, what do you want to do? You want to be the buyer or the seller, right? You want to be the seller, of course, okay? But remember, what makes this difficult for people is that when prices get to retail levels, the news is almost always good. The trend is going to be up, okay? And you're going to have nice, pretty green candles on your screen, all right? Okay. And remember too, if you start talking to people, I get emails from people once in a while that say, I was talking to a friend about this, and they trade, and they don't really get it because it's almost opposite of what the books say. If that happens to you when you're talking to your friends, don't try to convince them too much. Remember, let people do their thing. That just leaves more money for the rest of us, right? Okay. Yeah, Paulo, let me take a look. So any questions on this one? Again, I just wanted to point out that important concept of larger time frame areas, smaller time frame levels that you should take or not take. Okay? All right. Someone wanted to look at the dollar-yen. Let's take a look at that. Okay. And let me go back and make sure I'm not missing any important questions. I'm trying to get to all of them. Rafa, that's a good question. If someone could help with Rafa's question, that would be great, because I can't answer that. I don't know the answer to that question. Paulo, I wouldn't say that. An institution, a bank, they know where they own inventory from, and which means they know where they need to sell the inventory to make a profit, right? Okay. And a big bank, knows where all the supplies and where all the demand is typically. But they know where their supply and demand is. And I wouldn't even think of it that deep because the chart's telling you where all that stuff is anyway. Okay? All right. Thanks for helping with that question. Excellent. Okay. All right. Let's move on. So I want to look at dollar-yen here. So here's the dollar-yen. And let's see what we have here. So we've had a nice rally underway in this market, right? We've coming off a huge downtrend. And if you take a look at the daily chart, we've just come back to we've just had a big rally and then in basically one big red bar. We've come all the way back to the origin of that rally. So there's probably something in this area, that represents demand. This is just the reason why I'm not too excited about this area is because it's a big sloppy area with way too much risk. We'd have to come down to a smaller time frame to find something to buy against. So let's take a look at the hourly chart. Let's come down to an hourly chart. Let's see if there's anything there. Okay? So let me get the hourly going here. And it's not that we are not excited about this chart. There's just not a whole lot of we're going to have to do some work to find something clean on here. Okay? Trying trader, yeah, there's a few. Number one, where is that level in the bigger picture? Number two, is it a fresh level? That's a big one that people, mess up. Okay? It's got to be a fresh level. Number three, is there a significant profit margin with it? Meaning, is there room to the, the nearest opposing level? Things like that. All right. Okay, so on the dollar-yen here, we're looking for anything to the left that represents demand. So here's and to that question that just came up, let's draw on a level here. So I'm on the hourly chart. Well, we see in the big picture we probably want to be a buyer at some point soon, but where exactly do we do it? Where's the low risk, high reward, and high probability buying opportunity? We've got this kind of obvious drop-based rally demand level below. The only issue with this one, now I'll recapture the chart for you. Yeah, Rafa, kind people, yeah, it's a great group. FX Street has done a great job of attracting some really quality people that are really here to kind of help each other, and it's a good group. Good group. Okay. So we've got that level below. The only issue with that one that I've just drawn in there is that if you look, price has already come back to that level. So we can't officially call that a fresh level. Okay? But one of the things we do with that concept, that rule, is we don't just want to say only buy the first pullback. Okay? That's okay, but we can do better than that. Instead, what we want to do is take this a little bit deeper, all right, and say, well, whether prices have pulled back into this level or not, how deep are the retracements going into this level? So if you look at this area I'm pointing at now, we see the prices have not declined too deep into the level. In fact, they just kind of touched it and took off. What does that tell us about the demand levels? Is it likely to be still, a significant amount of willing buyers left, or no? In other words, would we want to buy there again, or not? You know what I mean? Yeah, it's probably still a decent level. Okay. In fact, I'm kind of going to say something. I'm kind of contradicting myself here, but just hear me out. But you might have 5, 6, 7, 8 pullbacks into a level, and it still may be a great buying opportunity. What you want to watch for is how deep prices are moving into the level. As a good rule of thumb, okay, once prices have penetrated, 50% or more into the level, you probably want to stop taking it, okay? Because, again, think of what this stuff really represents. Think of the real willing buyers and real willing sellers. My experience in this business started on a trading floor with buy orders and sell orders in front of me. Real ones, not things you see on a level 2 screen or bids and offers on a trading matrix, okay? That's not real. Okay? So that's what this level represents. So every time prices come back into this level, yeah, exactly, someone's kind of commenting on it there. Every time prices come back into this level, some of the demand, the willing buyers are able to buy. Okay? So again, each time you come back to a level, that amount of willing demand is decreasing, and the whole supply-demand equation is becoming more in balance. Okay. There we go. So, yeah, I would monitor that level. That level looks decent. And if we check, it's just below 83. So let's take a look at the daily chart. And if we buy just below 83, we're buying right at the extreme of this area of demand here, right? Okay. So not bad. And if we look just below 83 on this 240-minute chart, let's do that. Okay. Let me pull this chart up for you. Okay. Get rid of some of these. Blow this up. Let me capture the chart for you. Got a little nose issue going on today, so hopefully that's not. Hopefully things are coming through clear. Sorry about that. So just below 83 and down to about 82.80. So we're looking to buy in this area here. Okay, that's okay. And another thing, another odds enhancer that we like to use at Online Trading Academy are levels on top of levels. So it's sitting just below that area that we found on the 60-minute chart is this demand level down here at which starts about 82.60. Okay, which is just under. Okay. All right, so you really have. Let me scrunch this up. Okay, I'm kind of bouncing around here. Here we go. And let me take this picture. So there. So you have two levels sitting on top of each other. Okay? All right? The one on the right is sitting just on top of the one on the left. All right? And we like that. We like levels on top of levels. Okay? And the other reason why we probably don't want to be a buyer above 83, okay, another reason, take a look at, I don't know, let's take a look at the weekly chart, okay? All right? It's not the greatest area, but, look to the left of 84. The reality is, the origin of this strong drop in price that I'm pointing to now, where did it start? It started between, 84 and 86, right? So we don't want to be buying anywhere near 84, right? That's like account suicide. You follow me? Okay, so if we're buying below 83, at least we're not buying right into that larger time frame supply area, right? We're buying a little bit closer to in between 82 and 83. You see what I'm saying? Okay. So that's another reason why I went a little bit lower than current price in this market. Does that make sense? Okay. Yeah, I see your question there. How close to the larger? Your risk reward on the actual level that you find is going to dictate that. So as long as those levels we found have a decent profit margin with them, risk reward, we're good. Okay. So by doing your analysis the right way, it's going to force you to move lower around the curve because you're not going to be offered big profit margins for those. You're not going to be offered big profit margins with your demand levels when you're too close to larger time frame supply. It's just not possible. Okay, the chart will take care of that for you if you're doing the analysis right. Okay, Roxanne, why do we like levels on top of levels? Well, let me ask you a question. Okay, remember I started my career on the floor of the Chicago Mercantile Exchange, specifically in the currencies, right? So I was handling order flow, right? Real willing buy orders, real willing sell orders. And your question is, what's the whole point of the whole levels on top of levels? So let's say you're on the trade desk today, okay, and you get a free pass and you can actually trade your own accounts, and you see the largest stack of sell orders on the desk in front of you is at say 88, okay? So let's say that largest stack of sell orders, the real supply that day in this market is at 88. And the nearest willing stack of willing buyers, the nearest, the buy orders, when you look down on the trade desk in front of you, is until 80, I don't know, quite a bit lower. The whole point is, Roxanne, where are you going to be comfortable selling short that day? What price level? 86, right? You can't lose. You see the orders there. You're going to be a short seller at 86. Does that make sense? Okay. Right? And you're going to do, so you can't lose. It's free money, right? That's why it was illegal for me to trade my own account, because those were real willing buy and sell orders. But let me ask you this, Roxanne. Is there anything that would make you more comfortable selling at 86, selling short at 86? How about this? How about if there was an even bigger stack of sell orders at 86.05? Would you now be more comfortable selling short at 86? Right? If you're looking down, you see those big stacks of sell orders. Right? You'd probably be more comfortable now selling. Yeah, so if you agree with that logic, then what does that picture look like on a price chart? It's levels on top of levels. Okay? Right? And again, it brings up the same point that we keep getting to. Instead of just reading trading books and believing that information and trading that information because the book says so, think this stuff through for yourself. Think of what represents a good buying or selling opportunity on a chart, and then go look for that picture, right? Okay? Everybody here already knows how to properly buy and sell things, I hope, right? Hopefully you're not, when you go buy a car, hopefully you don't offer more than what the car dealership is asking, right? We all offer lower prices, right? We don't pay the restaurant twice what the bill is because we like the food so much. We pay what the bill is and hopefully give them a little tip if the service was good, right? We all know how to do this already, okay? All I'm suggesting is start doing exactly that on a price chart, right? And I'll tell you we have 111 people with us today. I'll tell you who the best traders in our group are. You want to know who the best traders are here? And I don't think I know anybody personally in here. I mean, Boyke in the group, we've been together for a while, but I could tell you who the best traders in the room are, or the best potential traders. You want to know how I'll tell you? Let me ask you a question. Anybody in our group cut coupons for anything, food, anything out there? Anybody cut coupons? All right. So these people that are saying yes, those are already real good, potentially really good traders. Now here's the best traders in the group. Has anybody ever actually sent in a rebate? Now, I'll admit I never have. I probably have a stack of them that I meant to send in, but I never did. Who has sent in a rebate? Okay? Now, you people are the best traders in the group, okay? Because you demand lower prices. You will go out of your way to pay lower prices for things you're going to buy, right? Now, doesn't it sound crazy when you think about trading? Nobody does that, right? Everybody waits for prices to rally. They wait for uptrends. They wait for good news, and then they buy. Why do you think the majority of people lose at trading? That's the whole point, okay? A rebate, yeah, if you don't live in the U.S., maybe you're not familiar with that. That's like if you, a lot of times, if you're buying something, part of the pitch will be, if you buy this, they're going to give you a little thing to send in, and they'll send you some money back, okay? Yeah, things like that, exactly. All right. Excellent. So, all right. Yeah, so you guys are already good at that. Excellent. Nice job. So let me go back to this chart here. And just a sec. Just want to make sure I type my email address in there. So I just typed it in there. It's sseiden@tradingacademy.com. All right. So I just I just looked at the time and I see we're about out of time here. Time really flew by this session. But again, so here's my email address. Send me an email anytime if you have any questions or comments. I'm only here for you. I know we're going to have another webinar or two in December. And again, I think instead of going in with a big lesson, next session we'll probably focus more on the Forex futures. And we'll start with, and we'll stick with the smaller time frames. We'll try to make sure the session is held early in the morning. So there's some trading opportunities that pop up so we can kind of walk through these things together in real time as the trades are happening. But anyway, thanks for your time and thanks for your trust. This is a big thing. You know, this is real money. So, we don't take this lightly. Anyway, have a great day, everybody. Thank you.